Hello everyone, Tom from Market Zone here with a new weekly market analysis video in which I'm going to cover and explain the trading scenarios, the harmonic trading scenarios that I mentioned in this week's newsletter, harmonic trading scenarios for EURUSD. So stay tuned, we start immediately. Hello everyone, what's up? Tom from the Market Zone here, and before we start I just want to say thank you for visiting my channel again. Thank you for watching this video, and also to remind you that this video explains only a part of this week's newsletter, that if you haven't read already you can find it at www.themarketzone.net. Go to the weekly markets analysis tab and you can read the full newsletter there. Now let's start talking about EURUSD. EURUSD opened the week with a little bit of bearish pressure following the elections in Austria that gave a serious boost to the far-right party, but that bearish pressure was later on erased during the day, and now we see EURUSD above 1.18 again. In this week's newsletter I mentioned two supporting elements for EURUSD. The first one was the faster May line, that's the yellow line that you see right here. The yellow line provided support for EURUSD this week. We see buyers stepping in, pushing the price back above this line. We still have 90 minutes till the close, but it looks like EURUSD is going to close above the faster May line and confirm it as support. The second supporting element, which will become relevant if EURUSD will close below the faster May line and continue lower, is this structure zone that you see here between 1.17 and 1.175. The reason I mentioned these two supporting elements is because both of them, the faster May line or the structure zone, presents two potential entry zones in an aggressive C entry, a bullish aggressive C entry, which means that you buy the C point of this potential bearish bet and expect EURUSD to rally all the way up to D to complete the pattern. Technically, from an harmonic trading point of view, C point can be here, a 38.2 Fibonacci retracement of A to B, and then we will see a continuation move towards D to complete the bat pattern. And it can also be down here, 618 Fibonacci retracement, 78.6 or even 88.6 Fibonacci retracement, a deeper retracement, which is much more common when you talk about bats. That is why I explained in the newsletter that although I mentioned two potential entry zones, I prefer to see C as a deeper retracement of A to B, which will make it a better bat pattern, and then maybe a double bottom that will lead to a strong rally in EURUSD towards the ECB meeting. So to summarize this bullish aggressive C trading scenario on EURUSD, we have two potential entry zones. One is 1.18 and the faster May line that currently holds as support, as you can see. In order to see EURUSD reaching to D, we need to see the price climbing and closing above the 50 MA line. The other option is that if EURUSD will decline lower and reach this 50 pips wide support zone between 1.17 and 1.175, you should look for bullish reversal signs inside this potential buy zone and time your entry buying the C point and expecting EURUSD to rally all the way up here to 1.2 to complete the bat pattern. So far I talked about a potential short-term bullish scenario on EURUSD that at the best case scenario can drive EURUSD all the way up here to 1.2 to meet strong weekly resistance. First of all, it will complete a daily bat pattern. It will also retest the bottom of this broken trading channel as resistance. It will meet a structure zone that you can see here. Resistance, 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 and of course 1.2 is a psychological level that should act as resistance. So if EURUSD will reach all the way up here to 1.2, it will create a very interesting selling opportunity. But what if EURUSD won't have the power or the momentum to push all the way up here to 1.2 to complete the bearish bet and to create the bearish opportunity that I mentioned a few seconds ago? What if EURUSD has already met its resistance last week when it failed to close above the 50 MA line that acted as resistance? If you are bearish on EURUSD or extremely bullish on the dollar index for that matter, and you don't think that EURUSD will have the power to reach 1.2 to complete the bearish bet pattern, perhaps what you should focus on is on another pattern, an AB equals CD pattern. That's this week's bearish scenario that I mentioned in this week's newsletter, an AB equals CD pattern that the C point was created last week when EURUSD failed to close above the 50 MA line. This bearish scenario basically suggests that last week we saw the end of the bullish pullback in EURUSD, and from here, from the 50 MA line, EURUSD is expected to create an equal distant move, ABCD pattern, that will drive EURUSD all the way down to 1.15 to test the strong weekly structure zone, a weekly support zone. Also, for the bearish trading scenario, I described two potential entry zones. The first one, an aggressive entry zone, means that you sell EURUSD as long as it stays below the 50 MA line. For example, you can sell EURUSD below 1.18 and place your stop loss above this pin bar that you see here, above 1.19. You expect EURUSD to decline first to 1.17 and then towards the final target zone 1.15. The more conservative approach, in which you are looking for strong bearish confirmation signs before you jump into a bearish swing trade, requires you to wait for a close below 1.17. Basically, you want to see a breakdown of the structure zone and a violation of this potential bearish bet that I explained in the bullish scenario. Imagine that you decide to short EURUSD below 1.18. You place your stop loss above 1.19. That's about 100 pips wide stop loss, and then EURUSD declines, reaches 1.175, the top of this daily structure zone, a boom, rally all the way up here to 1.2, just according to the bullish trading scenario that I explained a few minutes ago. In that case, you risked 100 pips, EURUSD declined only 50 pips before it rallied, and you didn't even get one-to-one risk reward on your bearish trade. And you got to consider such a scenario if you are taking the aggressive entry approach. So how should you trade EURUSD? I presented here several scenarios, several entry zones. Which one should you choose? Well, unfortunately, I can tell you the answer to this question. It depends on many parameters. It depends on price reaction to each and every one of the price zones that I mentioned in this analysis. This is something I do live with my Elite Zone members. That's how I guide them, trying to time the right entry at the right price zone. Some of you may want to avoid all the trading scenarios that I explained between 1.17 and 1.19. You want to wait for a completion of one of these patterns, the bearish bet near 1.2, bearish trading opportunity, or the bullish trading scenario that will be relevant if EURUSD will reach 1.15, test the weekly structure zone, and complete the ABC pattern. And some of you, probably more aggressive traders, would like to jump early into the trades in order to enjoy the full extent of the potential moves. For example, buying the C point here at the lowest point possible, 1.17, in order to enjoy a potential 300 pips rally all the way up here to 1.2. It all depends on your trading style and the way that the price reacts to the price zones. That's it for this weekly market analysis video. I hope you enjoyed it. I hope it provided you with the information that perhaps was missing in this week's newsletter. If you haven't read the newsletter, I highly suggest that you will go to www.themarketzone.net, go to the weekly markets analysis tab and see the first post there. Read it. We have scenarios on EURUSD that I explained here, on DXY, SPX, XLF, and also gold. Very interesting newsletter this week, so go read it. And thank you again for watching this video. Don't forget to subscribe to my channel so you won't miss the next video. See you in the next video. Bye bye.